Hey folks, it's Vic Noble here with your weekly trade example for the week ending April the 19th, 2013. And I want to talk to you about getting high reward to risk ratios in your trading is so important, and it makes such a difference. After all is said and done, and all of these videos on market analysis and pattern recognition and the identification of key levels and all that kind of thing is over with, the bottom line is that you need to be able to see some benefit from it all, right? You need to be able to cash in on it. And as most of you know, I run a service I've had for many years called the Coach's Corner, where we repeat these concepts over and over and show trade setups from members using the concepts and the approaches that are taught. And I have to tell you that there is no greater satisfaction for a coach of any kind than to see somebody flourish because of something that you help them with, whether it's a better athlete in the case of sports, or a better person, or in the case of what I do, a better trader. I'm constantly getting email updates from our members. And it's interesting because quite often they, quietly go about their business without without me even knowing how well they're doing. And then I get an email, and it's pretty amazing. Our focus is on trades that have extremely small risk, where it makes it very easy to pull out a reward of 2 to 1 at the very minimum. And many of these trades commonly go for 3 to 1 reward to risk and much higher. And when you start to do this, your account growth can be quite staggering. One of the members in the last session was telling us that he used to use stop losses in the order of 35 to 80 pips. Now you can imagine it. Let's just say a 50 pip risk. A 50 pip stop loss means you need to make 100 pips just to get a 2 to 1. Now he's changed it since he's been in Coach's Corner. Now his stops are more like 10 to 15 pips. And his account growth, I'm actually not even going to say it here because I think it's a little bit too out there. It's huge, huge. The Coach's Corner members know what I'm talking about. It was just gigantic. I just had no idea this was happening to him. It was pretty amazing by anybody's standard, and it just absolutely skyrocketed. And the thing is, like I say, it's a big account growth and all that. And I always hesitate on these things because not everybody's going to get different results, and it might take you a different amount of time, but it just shows you what can be done. But that's the key to getting great reward to risk trades. Super small risk, big profit potential. And when you combine that with patterns that have exceptionally high accuracy, and not that it's even necessary to have exceptionally high accuracy, because if you have good reward to risk, you don't have to be very accurate. But if you have that, you have the best of both worlds. Let me show you a couple of these trades, what they look like, so you'll get a very, you'll get the idea of a very low risk, high reward trade. And I'll show you ones that members themselves have sent to me. People in the Coach's Corner might recognize these. The first one was a great momentum trade on the euro yen pair. And the way we do these is by waiting for price to lead the way. And it's a top-down process where we watch key levels on higher time frames together with confirming candlestick action, and then we look for a very specific pattern to set up. And for trading momentum, we use pattern number 6 in the RFP course together with slingshots and MOFs. Stands for money on the floor. And these two trades are just a really potent combination. This particular trade, again, was on the euro yen pair you see here. And at the time of this trade, which is on in this area here, as it came down here, the average daily range here, the 5-day average daily range, was over 200 pips. So it's pretty darn volatile. When you trade a pair like this, you're going to want to give it a bit more room. And in this case, the guy that took this trade used a 5-minute slingshot, and he sold it right up in this area right here. Let me just get that. Yeah, it was right in this area right here where he sold it on a 5-minute slingshot. And it was at 130.31 was where he sold it at. 20 pip risk, but the big volatility goes both ways, right? I mean, relative to the volatility of this pair, 20 pips is very small because you can expect much, much bigger profit potential, bigger moves. And he ended up riding this one down all the way down to right here, 129.10. He had his reasons for it, which we saw in the Coach's Corner, for 121 pip profit, with just a little bit over 6 to 1 on the reward to risk. And in fact, was as a follow-up to this trade, he let us know that he ended up with his best week of trading so far. I'll tell you about this one. He told us that he had a 19% return for the week. And again, this is in 1 week. This guy's been in the coach's corner now for just a couple of months, maybe 3 months now. So, I mean, he sure has picked things up quickly. You just never know. But the key to it is that he's getting very big wins compared to his risk. Actually, his accuracy hasn't been all that huge, but it's been certainly good enough. On Wednesday, that's today as I'm recording this, on the Euro US dollar pair, I'll go over that one right now. There was more really good price action on this pair today. Let's take all this stuff off here for now. And we again, and I had to do the coach's corner today instead of our regular Thursday, but we had several people get a very good short on the Euro US dollar. Again, it was right in here. It was a pattern number 6, and it was also a 15-minute slingshot sell, and that trade set up for a sell just over here where was the ideal spot, just above the 131.40 level. Actually, some people got short at 131.43. I saw 131.44. One guy got right in at the top of this retracement, well, just 1 pip off of it. He got short at 131.45. Just incredible. I know that one of the traders had just a 10 pip risk in the trade, took it on, took it all the way down here, and took it off with a 35 pip average. So that was 3.5, like 3.5 to 1 reward to risk. I mean, that's just outstanding. So I hope you can see that by having a methodology that can get you into a trade with very good accuracy, you won't need to be risking very many pips. And when you don't risk very many pips, then it doesn't take much of a move to get a good reward compared to the risk. Does that make sense? And that's the key to building a trading account very quickly, while at the same time keeping risk super small at all times, which is absolutely critical. Okay, so I'll leave it at that. I hope that all makes sense, and also I hope that you guys have a great weekend and week ahead. I'll be back at the end of next week with another weekly trade example. Take care.